And today, the Federal Reserve keeping interest rates at zero, but indicating they are on the way up. When and how much? Let's talk more about that and what it may mean for you. Yahoo finance reporter Alexis Christoforous joining us now. Good to see you. Let's start off first by just walking us through how Chairman Powell is explaining his plan now for the next several months, and how are the markets reacting so far?
Well, Kira, we got our clearest signal yet that interest rates are going to be rising in this country. The Fed basically teed up that interest rate hike for their next meeting, which will take place in March. It would be the first interest rate hike we've seen in 3 years, and it would be in an attempt to rein in inflation, the highest inflation we've seen since the 1980s. And in short, it means that it's going to get more expensive for consumers and businesses to borrow money. Now, how is the stock market reacting? We know it's been a wild ride, a really volatile couple of days on Wall Street leading up to the Fed's decision today. We had a really nice rally, and at one point, the Dow was up better than 500 points. I'm looking right now, the Dow is off about 200, and the broader market is lower as well. And one of the reasons why is because at that press conference today, following their decision, Fed Chair Jay Powell said there was, quote, quite a bit of room to raise interest rates before it would start hurting the job market or do harm to the economy. So yes, traders have been expecting interest rates to rise. I think they were a little surprised to see that the Fed may get aggressive with those interest rate hikes if they need to.
And Alexis, you said that this is bad news for consumers. Could you spell that out a little bit? How so? And what would you advise people in an era of rising interest rates, something we haven't seen in a while?
We really haven't. In fact, there's a whole generation out there that not used to higher interest rates. We do see that this has a lagging effect. So let's say interest rates rise. We're probably going to see short-term interest rates rise by 0.25% come March. If that happens, we probably won't really start to feel that in the real economy for 6 to 9 months. And when you do see it happen, you'll see it pop up in things like higher credit card interest rates on auto loans will go up, and also adjustable rate mortgages. You know, these rates are not directly tied to fixed mortgage rates, so 30-year, 15-year mortgages, which we know are very popular, are not directly related to the Fed's rate. But in an environment where interest rates will be rising, you can bet that it will be more expensive, you know, to take out loans for your home. Now, on the flip side, there is a bit of a bright spot when you talk about interest rates rising, and that means you'll be making more money on your money in the bank. So things like savings accounts, money market accounts, if you have your money tied up in CDs, you'll be making a little bit more interest on that money.
Alexis Christoforous, thank you so much. It's tough when you go to the grocery store, you're thinking about loans, you're thinking about borrowing money. I mean, it's impacting everyday Americans every single day, and we're just looking for a light at the end of the tunnel. Appreciate you and your insight, Alexis.
Sure.
Hi everyone, George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel, and don't forget to download the ABC News app for breaking news alerts. Thanks for watching.